Hey guys, in this video, we'll be talking about consumer sentiment. What are property investors and owner-occupiers thinking? What do they think will happen to the property market, national Australian property market, right now, in the next 3 months, in the next 6 months? How was it in the past? What can we learn from consumer sentiment? Right? Data is everything, but then there's also something called sentiment, and that can be quantified as well. So stick around to the end if you want to understand the general vibe, what Australia is thinking will happen in the property market, and what are the consequences of that. Okay, my name's PK and I help people build passive income through property investing using data without needing a $15,000 buyer's agent, whether it's right now or at the end of the video. Please leave us a comment, give it a like, give it a thumbs up, hit the subscribe button, because this channel really exists to help you guys get ahead through property investing, through the Australian property market. So, there's a saying that happiness unshared is not really happiness. All right, that's by Seneca. It's a very lofty goal, but that's really what I'm trying to do in this channel. I'm just trying to share the types of data, the types of insights, the types of knowledge that has helped build me quite significant passive income. I've done a video on my $100,000, $120,000 passive income. I'm trying to share these insights with you for free so that you can also achieve that if you take action. So what you're looking at in front of you is the Westpac consumer sentiment sub-indexes. Now, this is the most popular or the most renowned consumer sentiment database or index in Australia. And there's 3 lines that I'm going to take you through. Really important for you to get a pulse, an understanding of the property market, as well as all the other data that I've spoken about in my last 200 videos. So let's look at this red line first. So this one explains price expectations. So the general populace, what does it expect house prices to do? Sometimes when it expects something, that becomes a self-fulfilling prophecy. Okay, even if the data isn't good, there's enough people, enough critical mass that think that a particular location, city, suburb, LGA will do well, and then by by virtue or self-fulfilling prophecy, it does do well. So that's the first line. Second line is this gray one, and what this gray line is saying is unemployment expectations. So unemployment, is it getting better? Is it getting worse? This isn't real unemployment data. This is just sentiment. Okay, I'll get back to that in a second as well. And then this kind of lighter line is time to buy a dwelling. Is this a good time to buy a property, whether it's to live or whether it's to invest? So let's go through these. And this is really, really important that you understand this, because it can give you an edge on where to buy and how to buy and when to buy, especially at the state level, which I'll share a few insights in a second. So let's start with this red line real quick. Price expectations. You can see in the middle of last year, 2020, price expectations tanked. And that's obviously because that's when really COVID hit. The banks were predicting in March last year that prices would fall by 30%. All the media was saying it. All the content that you consumed, was probably saying it. Therefore, everyone got really scared. And they thought prices would fall. Then very quickly, they realized that actually wasn't going to happen, because every time there's a crisis, the government pumps in money. That's what the central banks around the world have learned since the GFC, that they can just print money, call it quantitative easing, and get us out of any hole. I'm not going to comment on this video whether that's right or wrong, but it works. And so that's exactly what happened. It got us out of that hole. And so right now, even though price expectations from people for the Australian property market peaked back in May, you can see that they haven't really fallen. People still expect house prices to go up. I know this data is only back to September. It's lagging data. You can't get, to the very day of this video, you can't get up-to-date data, but I can tell you that it's pretty flat since then as well. So if you're sort of thinking that prices are now going to fall, you're probably an outlier. The general populace thinks that, price expectations, they are still going to increase. You can see that it's above the long-term average. The long-term average is the 0% on this index. So it's still, in terms of standard deviation, it's still well above that long-term average. If you're getting value, guys, hit the subscribe button. The next line that I'm going to talk to you through is this dark gray line. So unemployment expectations. Now, once again, in the thick of COVID last year, you found that people were getting, laid off. It was kind of a terrible time. And so this gray line went up. The expectation for unemployment, not real unemployment rates, by the way, necessarily, but the expectation for unemployment increased. And now that steadily came down as monetary stimulus, fiscal stimulus, state government intervention, all this sort of thing happened. You can see that that's increasing a little bit here in September. That's because of the Sydney, Melbourne lockdowns. The most recent data brings it right back down. So right now, unemployment expectations are well below 0%. In other words, well below the long-term average. So, people are pretty confident in the robustness of their jobs now and in the future, and in the robustness of the Australian economy. Now, the last chart, or the last line, I want to take you through, very important, is this light one. So you can see time to buy a dwelling. This is really interesting. So, naturally, when COVID struck us in March last year, time to buy a dwelling, it fell off a cliff as well. But very quickly, people saw that prices were increasing, and it kind of, was counterintuitive. But once you scratched beneath the surface, understood the data, you understood why it was actually happening and why it was sustainable. And so that came right back up. So it was, now people think, okay, well, it's now a good time, relatively speaking, to buy a dwelling. It hit the long-term average around November last year. So 0% represents the long-term average. So that means it was, as good as a, long-term average in people's opinions and their perceptions to buy a property. Now that continued to increase at the end of last year, and then it started plummeting. So you might say, look, PK, this is plummeting. People's perception of whether it's a good time to buy property, not their price expectations, but whether it's a good time for them to buy property, that's coming down. But in 2021, we've seen a huge price boom basically everywhere. So how does that relate? Now, the reason is people miss out on properties. They put in 2, 3, 4, 5, 6, 7, 8 offers. Agents take them for a ride, or whatever may happen. They become disillusioned. They say, look, it's all too hard. I'm going to give up. Or they outsource to a buyer's agent who overpays, or, buys in a location that's not super, whatever the case may be. But that time to buy a dwelling, is this the right time for me to buy a dwelling? Not price expectation, but the practicality, the applicability, the ease, you could almost say, of buying a property, that came down. And you can see that it's been coming down consistently, became harder and harder to buy properties as price expectations rose, and in fact prices rose. But you can see since September, and actually this line has continued to increase, it's becoming easier. So it became harder and harder to buy a property, time to buy a dwelling. That chart or that line went down, then it started going back up because now there's more and more stock on market, which is natural for the kind of spring, summer season. So right now it's very interesting. You see this confluence of almost three things. You see, if I kind of take these lines a little bit forward, knowing the data myself, the time to buy a dwelling has started to increase again because there's more stock. It's now easier to buy. Price expectations haven't eased off at all. In fact, this line, if you take it forward, I'll probably do another video in 2 or 3 months on this, kind of showing you the most recent data. It's very strong. And the unemployment expectations have come down further, right? Because Sydney, Melbourne are out of lockdown. So now it's like a perfect storm. And I know that a lot of people are thinking that, hey, property's already boomed. I've missed the boat. The reality is that Brisbane, just in the last 3 months, okay, so September, October, November, has risen by 8%. This is houses, 8%. 8% in 3 months, not annualized, not over 12 months. In 3 months, it's risen by 8%, almost 10%, right? So this is what I'm saying. You have to understand these lines. They can make you a lot of money. Price expectations, even though you may not think it, price expectations are, the sentiment is that it will continue to rise. The economy, people think it's super, unemployment is down, or unemployment expectations are down, and it's becoming easier to buy a property according to this, and as you extrapolate it forward. So what you also find, just in the last few seconds, what you also find is that if you scope in or zone in on Perth and Brisbane, you find that this perfect storm is even more pronounced. So people's price expectations of Brisbane and Perth are even higher, and the time to buy a dwelling, that is much, much, much higher for Queensland and WA. Whereas for New South Wales and Victoria, this line is actually continuing to go down, the time to buy a dwelling. So, there's nuance in there. So that the key takeaway from this is, understand these lines. Go back and listen to this video again if you didn't quite understand. But, you can understand the confluence of these three lines, and the fact that the next 6 months, the next 12 months are going to be pretty super. It's going to be easier to buy a property. Price expectations remain high. Unemployment expectations are down, especially in Queensland and WA. Of course, there's plenty of opportunities in other states as well, but those are the kind of next layer down insights I wanted to share with you. So hopefully that brought you value, guys. Hit the subscribe button and give it a thumbs up if you enjoyed it, if it's kind of a different type of content piece that you enjoy. And lastly, I'll leave some links below to the podcast and the Facebook group with more than 10,000 members for you to really step up your learning. My name's PK, and guys, I just want to say, go out and do it. Go out and do something. Property investing is fantastic. Just take action. Catch you later. Bye.